Clifford Bennett, Herston Economics. And so we start another week. Friday, very interesting data in the US. Unemployment down to 9% now in the US. And there's signs that a lot of the new jobs are coming in the area of new businesses and people who are starting to work for themselves, which is more of what we've been saying at Herston Economics, in that this global growth story, even in the US now, if you like, it's something that has spread from elsewhere in the world, from China, Asia, Latin America to the United States now. This idea of what I've called the bottom-up economic revolution, which the future course of economic growth is not about governments or central banks being clever. Thank goodness we don't have to rely on that. It's more about individuals, small, medium-sized businesses, just simply getting on with a lot of making a dollar, regardless of how bearish the news media is, regardless of what their political leaders are talking about in terms of things to be fearful of. So we're going to see more and more dynamism throughout Asia, Latin America, and now the United States, it looks. That employment data certainly points in that direction of people really just getting on with creating their own wealth rather than waiting for Big Brother to look after them, if you like. Moving through this week, it's looking good again for another very strong week. Markets hesitating a little bit here. The Australian equity market hesitating a little bit here after the strong rally of last week. The euro's a little bit softer again. Still think you buy this dip in the euro. The Australian dollar's holding on very nicely to gains above parity. Remember, we were looking for it to settle in a 101, 103 type range. At the moment, that seems to be the big parity figure to 102, but I think, a little bit of work here. A slight dip below parity is possible, but if it were to do that, I think the exporters would be all over it. So I think, any dip here, still buy the Australian dollar. Our outlook towards year end hasn't changed. 103 short-term target we've had for some time. 108 our year-end target, 112 in 2012. I keep saying it, the Aussie dollar is not at the top of its range of the last 20 years, it's at the bottom of its range of the next 20 years. Gold looks really good. I mean, the sell-off that's happening in gold with people saying Mubarak might move aside, so sell gold, it's not much of a pullback at all. It's showing that there is an underlying need to buy gold in the world, and I think that's going to continue. Oil consolidating nicely. It doesn't matter what's happening in the short term in terms of the geopolitics, really, with oil. The demand for oil is going to be tremendous. I think India is putting on 12 million new cars, trucks and buses on its roads this year, so demand for oil is going to go through. So it's still really bullish markets. But the Australian equity market in particular is particularly undervalued. It's worn the weight of a mining tax scare, it's worn the weight of plenty of natural disaster, and it's wearing the weight of a government that's really, just frozen up from being a very much a minority government. So all those weights on the Australian equity market, and it's still rallying. I think there's only the prospect for the market to accelerate further. So I'm looking for a push through, much higher. We might see another 100 points higher this week on the Australian equity market. Have a good day.